Hey everybody, Chuck Fosberg here from Next Home, and today we've got Steve Kelly with us from All Western Mortgage, and he's going to help us understand what's going on in the mortgage market right now. There's been a lot of information in the news, and some of it's true, but most of it really isn't. So we're going to interview Steve today and get to the bottom of this. So good afternoon, Steve. How are you today? And thank you for joining us.
Great, Chuck. Thanks for having me. Always a pleasure.
Hey, Steve, I think everybody's freaked out right now about interest rates going up. They're pretty high. And of course, we know that when interest rates go up, people's buying power goes down. So are there any creative ways that you have that can kind of bring that interest rate down from what we've been reading about?
There are, there's a thing called a 2-1 buy down. It's actually a 3-2-1 as well. But it's literally where if you're going to buy a house, and it doesn't cost the buyer anything, okay? The buyer can't pay for it. They're not allowed to, but they're going to buy a house, and the seller gives them, or the builder gives them a 2.5% concession, roughly, maybe a little bit less than that. They actually are buying the rate down for the customer for 2 years, and then 1 year, and then it goes back to the 30-year fix. So if you have, let's say the rate's of 7%, okay, and we do this 2-1 buy down, the customer starts at a 5% per year. And then the second year is at 6%. And then the third year is back at 7% for the life of the loan. It's a fixed rate. It's not an adjustment. So this is just a 2-1 buy down, and this with a seller concession to make it happen. And because right now, it's been the seller's market for a while, and that's starting to change. A lot of these sellers have their houses overpriced. And when they're coming off their sales prices, that doesn't mean the value of the houses are going down, but the offer, the demand of what they want is going down a little bit. Some of them were a little ridiculous, right? And so the goal is to help people get into these loans now at a much lower rate. 2% is a big difference in payment, all right? And then when the rates do down, which we are expecting to happen in the next 6 to 12 months, with the recession, we're going to be at probably in the 5s. So you're going to be at a 5, and then as the rates come down, when it shows that the benefit outweighs the cost, I would then suggest putting you into a fixed rate at the 5s or below. Maybe it's still sliding down, and we can get you in the 4s or something like that at the time. And you may never see those 7s.
So how do you know when it would be advantageous to refinance? Is there some way of knowing, or do we need to ask you, or how does that work?
That's kind of a personal thing for each person. I literally, my rule of thumb is when we're looking at a refinance, because we did a lot of these last couple of years when the rates were really, really low, right? And my thought process is not if it's more than 1%. It's I look at the cost of refinancing, and I look at the savings in the payment. Okay. And what I do is I take that savings and I divide it into those costs and see how long it's going to take you to recoup those costs and to where you're out of the red and into the black and you're moving forward. Now, my rule of thumb is usually anywhere from 2 to 3 years should be about that point. You know, some people are going to stay in their house for 20 years and they want to refinance, and it might take them 4 or 5 years to do it. They can argue with me that they want to do it. I'm not a big believer in it's spreading out too long, because things happen. You may want to refinance down the road. You may decide to sell or something like that, and then you never get in the black. Okay, so anywhere from 1 to 3 years. If you're down below 2 years, you're doing really great with that benefit. Unless you're going to move. I mean, if you're going to buy this and you're thinking about refinancing, but you're going to move in another year, then I'm going to recommend you don't. I mean, even though I want the business, I'm going to say, no, it's not good for you because you're losing money. But if that savings can beat out those costs after a couple of years, and you're going to be there for a while, then it's worth it.
Yeah, that makes good sense, because I think the current statistic from the National Association of Realtors is that people stay, on the average, to stay in their house 9 years. So, for a lot of people that would work. And if you're in the kind of business where maybe you move around a lot, or you're planning on moving in less than that, then yeah, it'd definitely be worth a conversation to see if it's worthwhile.
Definitely. And I mean, I've had some people where I've literally, when we were doing the refis, I was like, okay, the rates here, you're still kind of out of the ballpark, but the rate gets down to this threshold, then let's pull the plug and do it. And I show them the numbers, because that's a nice thing about my business. I don't have to sell it, but I just show them the numbers. They don't mind, right? And then we just wait. And I did so many like them, because the rates got to certain levels. Customers call me and say, let's go, let's do it.
Well, that's the thing I love about mortgages is it's just math. It's really easy to make a decision because you just look at the numbers and it either works or it doesn't work.
Exactly.
It just makes it so simple to make a decision.
Exactly. I mean, I just laid right out on paper, and this is what it is, and you can see what your benefit is.
Yeah, and of course, people are under no obligation at that point.
Of course. Yeah.
Yeah, very good. Steve, thank you so much for speaking with us today. It's awesome. And we really appreciate the benefit of your 30 years of experience as a mortgage loan officer. And thank you so much. We really appreciate it. Now, just in case people want to get hold of you, how can people get a hold of you, Steve?
Well, Chuck, first of all, I really appreciate it too. Thank you. And the best way to reach me is on my cell. I mean, I know there's a lot of different ways. Best way is on my cell, 727-415-1842. You can text me, call me, evenings, weekends. In fact, I do a lot on evenings, weekends, because that's when people aren't working. That's when they're best time. So 727-415-1842. You can email me. A lot of people like to email. S for Steve, S Kelly, Kelly, at allwestern.com. So S Kelly at allwestern.com. We're on Facebook, we're on Twitter, we're on Instagram, we're on all the social media. So, I mean, there's a million ways to catch us now. Just pick up the phone, it's free. Give me a shout. Let's go over what you got, and I'll do everything I can to help.
That sounds really great. Thank you again, Steve. Really appreciate your time today.
Thank you, Chuck. I really appreciate it.